please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Very good morning. Welcome to Chartbusters. Well, we've started off the week on the back foot. Crude oil prices moved higher. You had some weakness on the rupee, dollar strength actually. And in fact, those debt market liquidity fears continue to play out. And on the back of that, the Nifty is down close to around 45 points. The breadth of the market far worse, close to around 3 stocks that are declining for every 1 stock that's advancing. And if it wasn't for Infosys, well, the markets would have been done far more. So if you pull up a contribution chart, you'll see Infosys that's sitting with a gain of around 2%. That's at least holding one end up. Even in Friday's trading session, in an otherwise wobbly market, TCS did end the day with a gain of around 1% odd. A contribution chart really will tell you the picture. Hi, Rima. Good morning.
Hi, Nigel. But as we speak, the markets are recouping some of those losses. So the Nifty's recovered about 57 points from the low point of the day. For the mid-cap end, it's about a 200-point recovery from the lows. Still in the red, deep in the red, in fact, for the mid-cap as well as in the Bank Nifty. But some recovery is underway. Let's invite Ashwani Gujral for a quick technical check on the markets. Ashwani, from the lows, there is a bit of an up move. How would you approach this recovery? Should one sell into it?
See, basically, the bears tried to make a fresh low beyond Friday's low. Now, that has failed, and from those levels, we've had a substantial pullback. So that would mean that immediately, I think the bears are unable to break Friday's low, and that could lead to a substantial pullback rally. And because the falls have been so large, on the Nifty futures, you could get closer to 11,200. On the Bank Nifty, I think you could get even closer to, say, today's high, which was about 25,700, 750. So right now, we are long on the Bank Nifty. If you see Bajaj Finance, which was down 8% at some point, is now down only 4%. Now, these are stocks which give you a hint about, what is likely to happen. I think you could have more short covering as we go through the day, and probably at some point maybe get fairly close within 100 points of break even on Bank Nifty. I'm mentioning financials particularly because that is where the problem is, and that's where the shorts are. So that's where people should get long. Things like Yes Bank, etc. They could easily have 5-7% type rallies also. So just for the immediate term, I think Friday's low is holding. Having said that, individual stocks, Bajaj Finance is a buy with a stop of 2,200, target of 2320. Infosys is a buy with a stop of 710, target of 745. And DLF is a sell with a stop of 191, target of 180. Well,
Ashwani, if someone's going with that advice and trying to take a long call at this point of time, you're saying Friday's low, that's sub 10,900. That should be a stop loss, or will today's low be the stop loss?
Nifty, today's low is a stop.
Okay.
But on Bank Nifty, I think Friday and today's low are fairly similar.
Okay.
So that can act as a stop.
All right.
While there is pretty much mayhem in the secondary market, there is a lot of panic. Though, as we've been highlighting, from the lows of the day, there has been a recovery. For the Nifty, the low was 11,040. So from that level, there has been close to about a 50-point recovery. But there is action in the primary market as well. Garden Reach Shipbuilders and Engineering Limited, which is a state-run shipbuilding company, has opened up its issue for public for raising money. It is currently a debt-free company. It's got cash on its book. It's been paying dividend, but the financials have been a tad bit volatile. They've priced the issue at 115 to 117. We're now joined by Vipin Kumar Saxena, the chairman of the company. Mr. Saxena, if I just look at the company's financials in the last 2 years, the revenues have been fairly volatile. So in FY17, your revenues fell by close to about 30%. And then in FY18, yes, there was a growth. But about a 45% growth. But that, again, you could argue was on a low base. So going ahead, what should be the expected revenue run rate we should expect?
See, I must tell you that FY18 has done very well, as you brought out. Compared to FY17, we have got a top line going up, as you said, 45%, and the bottom line 650%. Going forward, the kind of things we have in our hand as of now, 4 projects of the Navy and the Coast Guard. We have a very strong order book of 20,300 crores rupees. In that, the shipbuilding division itself caters for 20,029 crores, and rest all comes from the, this is executable order book. Other 2 divisions also we have, one is the engineering division, and also other one is the engine division. Now coming to this big order book of the shipbuilding division, 20,029 crores. We have a very big project signed with the Ministry of Defence for 17 Alpha stealth missile frigates. Value of this particular project itself is around 19,300 crores.
Right.
And as per the plans, we'll be delivering 10 warships
Mr. Saxena?
These 3 projects, one of the Coast Guard and 2 projects of the Indian Navy. This caters for 10 warships. Right now, 13 warships under construction. Right. We will be delivering 10 more warships to the Navy and the Coast Guard in next December 2019. Right. Thereafter, major projects is P-17 Alpha, 3 stealth missile frigate. Right. I told you the value is 19,300 crores. And as per the contractual timelines,
right, Mr. Saxena, sir, you know, we are aware of this strong order book that your company boasts of, and that's very, very good news because visibility is there. What we are trying to understand is revenues have been lumpy over the last couple of years. As my colleague Rima said, that last year you delivered a growth of more than 40%. That came on a low base. You did roughly around 1,350 crores. For FY19 and FY20, what kind of a revenue number do you have, are you targeting? And also your margins have been all over the place. A couple of years of negative margins, otherwise you've seen 3-5% margins. So for FY19 and FY20, what kind of a revenue outlook do you have? And what kind of a margin guidance you can give? Because all your investors, your viewers, you know, are definitely waiting to listen to you. Go ahead, sir.
I must say that when you're talking about the past performance, that was primarily based on the kind of revenue order book we had in the range around 6,000 to 7,000 crore in the past 5 years. That was a segment. We had some orders of the Navy and the Coast Guard, which were on a fixed, I would say, margin basis, 7.5%. And of course, there were different, I would say, strategy which was adopted, which was, I would say, old conventional methods of ship construction. That is a conventional construction and also the concurrent design, telescopic design. So they were the old concept. But going forward, the shipyard has got altogether a new facility, that's a modular integrated construction facility. And with that, we will be making the warships in the form of blocks.
Okay.
We can make the warships divided into various kind of blocks concurrently at different location. That is going to cut down the build period considerably. And also the fact that the design, which was a challenge earlier, we have a totally new concept of designs. 3D modeling will be done very much in advance. Mature design will be there for the P-17 Alpha missile corvettes, missile frigates. And these things will be helping us a lot in, I would say, completing the orders well on time. Also, we are focusing on the internal efficiencies also to a large extent. That will also help us.
Mr. Saxena, we actually don't have too much time, so we're just trying to squeeze in a few more questions. So sorry for the interruption. What percentage of your revenues come in from the Indian government? The reason we ask is because the defense budget for FY18 has been lower to 1.56% of the GDP versus 1.65%. How much of a concern is that?
I must tell you that the current firm order book which we have of 20,029 crore of the shipbuilding for the 4 projects, there's no effect whatsoever with regard to any kind of financials or any cut into the payment which is supposed to be given to us against the stage completion. So as far as we are concerned, we have never faced such kind of trouble, and there's no issue with regard to the in future also going forward, there'll be any issue with regard to the defense budget coming down against these particular ongoing projects.
So your current order book is secure. What about going ahead?
I must tell you that apart from this order book of 20,300 crore, we have become the lowest bidder in the 2 major projects of the Indian Navy. Last year, October, we were declared a successful bidder for the 2 projects of the Navy. One is for the construction of 4 survey vessels large, each ship is 3,200 ton. Second project is for construction of 8 ASW shallow water craft. Now the PNC, it was against the competitive bidding process. PNC is already over this year, and both the contracts are expected to be signed. There's non-firm orders, but with this orders getting signed by this year end, we expect that my order book is going to go up substantially going forward. And therefore, we'll be constructing 8 plus 4, 12 plus 3, 15 warships by 2025. So that's the kind of future visibility which we have. Good order book, number of ships that will be made by the GRSE in coming years. A good growth potential exists with the shipyard.
All right, Mrs. Saxena, I know we are running short of time, but very quickly we can squeeze in this. What is your balance sheet looking like as of now? What kind of cash you have in your books? And what is the likely dividend payout that you will be looking at going ahead?
See, dividend, I would say the company is a profit-paying, dividend-paying company for the last 24 years. We are a zero-debt company. And with this kind of a dividend, I would say regularly we have been paying. Going forward, I would say company is expected to perform very, very well. And the kind of orders we have, I'm sure that all the stakeholders are going to be benefited, including my customers and the investors who are going to be investing in our company.
Right.
So that's how I'm looking forward.
Mr. Saxena, you're a zero debt company. How much cash do you have in your books? And you've been paying out, 30-40% in terms of dividend payout. Likely to continue with the same since you're so buoyant on so confident about your business? Go ahead, sir.
Cash. Yeah, we have the, I would say, cash in banks around 2,000 plus crores, which is against the stages which is supposed to be paid to us by the customer, that is Indian Navy. And these stages which have been given to us in the beginning of the project when we sign it, this is against the certain kind of activity which is supposed to be done by the shipyard in terms of ordering the equipment, paying the advances to the various OEMs, etc. So that those things are being factored into our, when we do the budgeting of the project, when we do the costing of the project.
Okay, all the best, Mr. Saxena. Thanks again for joining in. So the issue opens up today and it's open for the next.
As promised, let's get chatting with the management of Muthoot Finance. Mr. George Alexander Muthoot joins us. Hi, sir. Thanks so much for joining in on the phone line. Give us a couple of details, sir. The markets are a little jittery, the debt market in particular. There are fears in terms of liquidity out there. Give us some simple details. What is your current borrowing mix? How much of it comes from banks? How much of it comes in from non-banks? And also any kind of exposure you have to commercial paper.
Okay, we don't have any exposure in non-banks. Our exposure comes from banks, etc.
Okay.
But having said that, I think you need to know a little more about the gold finance companies, where Muthoot Finance, 90% of our funding is in gold loans. And gold loans are very short duration. It's just 3 months to 4 months duration. The loans are only of very short duration. And every day we have 150 to 200 crores of loan being repaid at our branches, and a similar amount of loan disbursal also. So our ALM or asset liability match or mismatch is not there actually. We are quite comfortable and we don't have any asset liability mismatch. That is as far as the gold loan company of Muthoot Finance is concerned. That is the beauty of gold loan companies.
Okay, that's on the gold loan part of the company. But the other businesses that you have, if you could just detail out the repayments that are due, and do you face any asset liability mismatch over there?
The 90% of our business, or rather 88% of our business is gold loan.
Okay.
The rest only 12% of our total AUM. So there it is just insignificant actually.
Okay, but just to get some more clarity on the 12%, are you facing any reduction in the lines of funding from the debt market, or it's completely bank borrowed?
No, it is a housing finance company has about 5% of our portfolio. Mutual fund company has microfinance has about 4% of the portfolio. That's it, and they don't have any redemption pressures.
Right, but sir, in the past you've been telling us you're looking to grow these verticals, right? So you'll be requiring to raise some money. Don't you think liquidity will be a little tight? Give us your analysis of that.
What we are seeing now is just a weak phenomenon. I'm sure in a week's time this is all correct. That's all. What we are seeing is just a day or a week. That's it. I think this correction is only for a week. It's not a long-term phenomenon. That's what I feel.
Okay, but if you had to go to the market today and raise some money, how much higher would it be? In terms of your...
Today, nobody would like to go to the market to raise any money because we'll have to wait for some things to clear. So that's not a good time to go to the market to raise. And we don't need any fundraising today.
Right. Sir, but you may not require, but you must be having a sense of what is the current cost of borrowing, right? And if you compare it with what was the cost of borrowing maybe a month or so ago, if you could give us your brief take on that.
Yeah, I think generally in the last 1 month, interest rates have gone up by about 0.3 to 0.2%. That's what we are seeing. Probably it will remain there, 0.3, 0.4% higher. I think it will remain there only. But what the present turmoil which you are seeing, it will correct, I'm sure, in the next couple of days or maximum end of the week.
Do you expect slowness in your housing finance or the vehicle finance business in the near term, given all these concerns?
These concerns are short term. I'm sure this will correct itself in the next couple of weeks.
But just for the coming quarter, in the coming 2 quarters, should these segments grow slower than what you had anticipated?
No, I don't think anything is going to. This is just a weekly, just a short phenomenon, and I'm sure next 2 quarters we will be able to grow as scheduled.
All right. Okay. So if you could give us some guidance, sir, for this year, then I remember in the first quarter, your growth rates were quite, your loan growth was the highest we saw in many quarters. So the street was quite excited about that. What kind of a number can you give us for FY19 that you have as a target, maybe a range as well, and going ahead as well? What kind of a growth trajectory can we see?
Yeah. In the year, we expect the growth in the AUM to grow by 15 to 20%. I think we are on target there. 15
to 20% for this fiscal year.
Yeah, that's what we have been guiding, and I think we'll be on target there.
Okay. Your yields, at least in the last few quarters, were about 20 to 22%?
Yeah, yields were there.
Okay.
Correct.
Will you maintain that above 20%?
Yeah, you see, we will be able to our gold loans, etc., are not at all interest sensitive.
Okay. So
the market rates of borrowings are going up. We can easily pass on some of this to the customers, and we have already done it. In the last month, we have increased our rates by 0.5 and 1 last month itself. So not an issue for us because these are not interest sensitive. Small loans, 40,000, 30,000 loans, it's not interest sensitive at all.
Okay.
The market borrowing rates are going up. People will understand, and they will also adjust.
Okay, final question, sir, before we let you go. You were indicating to us earlier that you are looking to even grow your, change the mix a little bit, since your dependence on gold loans, as you just told us, is more than 88% approximately. What is the ideal mix you'll be looking at going ahead? Non-gold, is it likely to move towards 15-20%? That's the target you have?
Yeah, end of 2019, we would like it to become 15%, and after a year, it should reach 20% of our assets.
Okay. All right, Mr. George Alexander Muthoot, thank you very much for joining in. So Muthoot Finance per se is not impacted too much. There is no tightness in the gold market, which is predominantly where they operate. So the stock has seen a bit of a recovery from the lows.